So today we're kind of going to see where everything leads, and we're probably going to talk about, we are going to talk about Warren Buffett and some of the major stock purchases that he just made with all the money that he has. So I guess, can you explain the different moves that Warren Buffett's recently made?
Um, the oddity about what he's done recently, or what Berkshire's done, um, background, he is stepping away from wholly owned subsidiaries, managing them, but he's still got input into investments and things, and he's still remaining at Berkshire Hathaway as an advisor, but he's sort of retiring as head man. Um, over the last, I think it's the last 3 years, they have been their companies, Berkshire Hathaway's companies, have been producing so much cash that I think they have $344 billion in cash just piled up over the last 3 years.
I
Yeah,
wish he had even
Bill.
like one millionth of that.
Yes, right. Uh, so the problem they've run into is what to buy that's not overvalued,
Mhm.
and they've been holding off purchases for some time, and they haven't been buying back their own stock. Now, Berkshire has been known to repurchase shares when they think that their own stock is undervalued, but they have been holding off doing that, which makes me think they either think it's somewhat accurately priced or overpriced. And I know that Warren Buffett has publicly made comments that he feels like the broader market in general is overpriced.
Mm.
So, yeah, they've been piling up cash as far as we can tell, looking for opportunities. And that being said, they're only required to disclose purchases over, I can't even remember now. It used to be like $6 billion. Um, so if they take a small position in something, you're just not going to know it. If they take a large position, it gets put on a 13F SEC filing. I think 13F is the document. So the rest of us get to find out in the next quarter what it was that they purchased. And they recently sold Apple's stock. Um, I don't know why, because it's not like they're running out of cash, but maybe there were opportunities that they thought they would take. And I don't know, they needed $344 billion to do it. But they recently filed another 13F and listed 10 companies that they'd purchased with, I think, 3.9 billion. I don't know exactly where how the distribution is, but it had some that I'm like, they must really know a lot about these companies, because I don't know. Some of these are like, I would not have thought Pool Corp. I would not have thought to purchase Pool Corp, but who knows? Do you have any follow ups to that?
Well, first of all, I want to say I wonder if Pool Corp got pool.com, and in that case, I wonder how much they paid for it because that's a pretty generic name, but like super specific to pools. So, anyways,
Yes,
um,
very specific.
uh, did Warren Buffett say anything about these purchases? Like, did he give any public relations about them at all?
I've not seen anything publicly posted about them from Warren. Now, he's also really good at keeping his mouth shut. Uh, I've been re-watching some of the old Berkshire Hathaway shareholder meetings, which are really good for how to think about businesses. But he is very good at being like, somebody will ask him a question about a stock, and he'll be like, "Look, we're not required to disclose purchases over whatever amount, and I'm not apt to comment on positions that we may or may not have taken or may take in the future that we're not required to disclose. I don't think it's good for the shareholders." But I mean, he'll comment about them generally. So yeah, we'll probably have to wait until um, shareholder letter. Maybe Greg Abel, who's kind of the new head honcho over there, will comment on it, or at the Berkshire shareholder meeting, we'll see what they have to say. But there was an interesting discussion about wholly owned purchases, um, where they were talking about the Class B shares. I don't know if you know, Berkshire has Class A and Class B shares, um, and the Class B shares are 1/30th of the Class A. And I never learned exactly why, but that was to forestall other people making, what are they called? They're like a holding trust, where the trust entity is sold, like shares of it are sold, but it is designed to hold shares of other companies. And so there were two of them that filed with the SEC for approval. That their whole plan was to buy Berkshire shares, which were like $30,000 at the time, and it might have been less than that, and then share portions of the trust for smaller amounts. But they come with a bunch of fees, and they underperform. It's not really a great vehicle. And so in 96 or 95, Warren Buffett and Charlie Munger, who had previously said they would not split the stock because people would ask, because like, your stock's expensive. His argument was, we want people who are investing for the long term, and we think by having a large stock price, we're kind of filtering for those people. And we don't see that splitting the stock does anything for the shareholders. So in 95, they did offer a Class B, which was 1/30th the price. And it was kind of to take the market share of the guys who are trying to make the unit trusts. Um, Not necessarily because they wanted to. Anyway, I thought that was interesting. I don't even remember how I got on that.
Well, did that change? I mean, I don't know when fractional shares became a thing, but did that kind of change once fractional shares became a thing? Because now really a $30,000 stock doesn't matter. You can buy
Yeah,
$1 of that $30,000 stock.
true, true. Yeah, I think that's probably accurate. I think that's relatively recent, maybe in the last 10 years or something. I think that's a pretty new thing. Um, so yeah, that if it was today, it probably wouldn't even matter anyway. The Class Bs don't have the same voting rights. I'm not sure they have any voting rights. Um, I think technically, when it comes to pricing, there's also like a slight difference. Um, they basically made Class Bs so that it wasn't as interesting. If you were really interested in Berkshire, you would buy Class A and not Class B if you could afford it. But yeah, that's probably irrelevant now. That's a good point.
Interesting. Interesting. So was the was each purchase like each company purchase over 6 billion or just the total? Because I'm wondering how like what counts as shares that need to be disclosed. Like if it's one huge $6 billion purchase or if they can split it up in a way
Mm,
where they don't have to disclose it or something.
right. It must be each purchase is, although that seems large, doesn't it?
Yeah.
So maybe the number isn't 6 billion. Maybe it's 1 billion or 2 billion. I don't know. By the time you get up in those numbers,
That's
it's
not
like,
large.
who cares?
That's crazy. Wow. Um,
uh, of note to me, the two that I recognized right off the bat were Nucor, um, which is a like a steel company, and I think they've gotten into AI a bit. I'm not quite sure how, because I had looked at Nucor 2 or 3 years ago as a possible buy, but I decided like I don't know anything about the steel industry. And I did look up some of the financials about it because I thought, okay, maybe, is there something here that Warren Buffett's team is seeing that I'm not, which I'm sure there probably is. Caveat, uh, I there's a lot of things in my too hard pile, and uh, Nucor was what I perceived to be overpriced several years ago. I mean, it was just going nuts. Um, and somebody did mention they wonder if Nucor has been somewhat beaten down because of fears over the tariffs.
Mm,
So, maybe there's intrinsic value there that is just being really shellacked because of people's fear of the market. But yeah, to me, it's like, I don't know. It seems like an okay business, but it's capital intensive and their return on capital is not that great. The other thing I was going to mention is, a lot of people that are all the articles say like Buffett is selling this and buying these, which is like, okay, yeah, it could be Buffett or it could be somebody on his team, like
yeah.
it's not necessarily him, but we would hope he's got some view of yes or no on that. Anyway, I think I interrupted you. Did you have another question?
Well, I was gonna say, do these purchases and the selling of Apple stock signal any sort of change in philosophy for him? Like, because I mean, he was hardcore Apple, and it's not like he doesn't still have a pretty big uh piece of Apple, but just selling, I feel like what's his main stock that he's talked about for a long time and just splitting it off into a bunch of different stocks that are in totally different industries, which makes sense, but like, does that seem like a change in philosophy at all?
Maybe. Um, the thing about Apple for him is he's talked about it, like he kind of stays away from tech stocks, and that's a real oddity, the Apple purchase. And when pressed, he is kind of mentioned it's a brand. He bought it for its brand value, not necessarily its tech. I mean, it's a strong brand. Panasonic is a good brand, but it doesn't really have that much brand recognition. Sony used to, doesn't as much now. What is it? RCA, I don't even think exists anymore. Logitech is like your low cost provider, but they don't really have any brand loyalty. Whereas Apple is both consumer technology, somewhat innovative, and an amazing brand.
Yeah.
So that's the portion that he understood really well and realized, oh, there's a moat here that it would take a lot for somebody to take this market share just by the fact that Microsoft is half or more of the computer market and they haven't taken it.
Yeah.
So there is quite a moat. Maybe it signals a change in philosophy. It is really curious that he would sell a small portion and not a large portion. But the curious part in that is it doesn't seem like he's selling it to buy something else because they're sitting on $300 billion.
Yeah.
So I don't know how to interpret that.
Does the $300 billion signal a change in philosophy at all? Not buying
Well,
cash?
I would say that is somewhat normal. Yeah, I mean this is the whole Warren and Charlie made a lot of money because in part because they were good at doing nothing,
Hmm.
and doing nothing is a position, and they're good at just waiting for opportunities. There was a discussion in one of the shareholder meetings about creating a preferred or authorizing a preferred stock that was not to be traded publicly And somebody asked about, doesn't this dilute shares? I mean, they talked about it with the Class B shares in Berkshire as well. Um, his comment to that was, it creates more flexibility for us in purchasing businesses, because sometimes when a business is purchased, they'll want Berkshire shares instead of a cash payout or whatever. And sometimes that's a preferred tax vehicle. They can sell whatever portion they want when they want to. The transfer can be done tax free or um, in a preferential way to them. So they don't have to realize selling their business today. They can do it over a course of whenever they want to. And then preferred stock also has rules on, if you give a dividend, which Berkshire's not known to do, you can give preferred shares a different amount, or you can set them up when you sell them to be like like almost a, well, I don't know, some kind of a weird pension. I was going to say like a bond, but that's not really true, where it's a defined amount. So I'm giving you these preferred shares and you're going to get paid X percentage over the next X number of years. So they authorize preferred shares to create a vehicle in which they could trade for the purchase of companies later, if people should want that. So in some ways, it seems like they're pretty good at maximizing opportunities in the future, prepping now to maximize a purchasing opportunity later, whether that be holding on to an absurd amount of money or creating a preferred stock in the case of somebody wants to just trade equities. Uh, but it is very vexing. I am still a little surprised that they haven't used that cash to purchase Berkshire shares, but I guess they think it's overvalued and they think they can get deals other places. We'll see what happens to the large amount of cash that they're sitting on. Because right now, I'm assuming it's producing some kind of interest at 4% or 5%. But
You know, some
uh, yeah, just a little pittance.
that's crazy.
But when Berkshire has made, previously 20%, you're kind of like, oh man, that's a bunch of money. It could be making a bunch more money.
Yeah,
Although clearly they don't think that's the case, right?
yeah. The the whole preferred stock thing is kind of funny because they have a business that is so good that businesses who are being bought by them would prefer to have their stock rather than straight up cash, which is
Right.
a good problem to have, I guess, having to create a totally new stock, preferred stock for them. Um, how is this uh these purchases affected the stocks themselves? Because, whenever Warren Buffett buys something, like everyone at least knows about it if they're allowed to, if it's disclosed, and everyone wants to buy it. Not everyone, but
Right.
so how has this affected like the price of those stocks?
That's a good question. I've not really checked up on that. Although I am curious. No. One of the stocks that was on the list was Domino's Pizza.
I just had Domino's.
Which do you feel like it tasted like it had a good moat?
Tasted like it was worth more.
um, by Berkshire. Yeah, that one was weird to me as well, because I was like, I don't know that this company has a moat around it. I don't know, it's pizza,
Hmm.
but clearly there's something there that I don't see. So let's see. 7.7% of Berkshire is, or of Domino's is owned by Berkshire.
Sheesh.
Can represent his outstanding. That's pretty nuts.
Yeah, that's a
Uh,
was that just from this purchase or from previous purchases combined with
that's what
it?
I was trying to find. I feel like they had purchased some already. Yeah, they had some and they just added to it. Um, Purchased 1.3 million shares during the third quarter of 24. They're not going to tell us, are they? I'm not reading all of that.
That's all right. I was just wondering if it like really boosted those stocks because
If it changed
once
it
Warren,
much.
once Warren buys something, it's like everyone's trying to buy it because yeah. But
Let's see. Domino's
also, who is
stock.
the CEO for United Health? Because I remember, was it last year or the year before when the guy
Yeah.
killed the CEO?
Uh huh.
It's just
Now
like,
that one, I do wonder if it was if that is an artificially shellacked stock because there was some little scandal with um, like a subcontractor or something where there was a fraud scare and the I think it's still like an ongoing investigation and because of that it scared away a lot of people.
yeah,
And so I did wonder if that's one that just has been on the watch list for a long time and now something happened, made the stock price fall, and so they've purchased it as a whatever. I mean, a depressed stock.
yeah.
Let's see, founder.
Also, Constellation Brands is just a seller of beer, wine, and spirits.
Yeah, that's like I think Mexican, isn't it? Mexican beer brands,
Something.
or
It apparently has
primarily
the
Mexican market.
market share of all major beer suppliers.
Ah, interesting.
And it owns Modelo, which is what
Oh, okay.
when you're watching football, that's all that comes on. Interesting.
uh, well, yeah, that would have to come from you because I don't watch football. Stephen Hemsley is the CEO of United Health. I don't think I know who that is.
Me neither.
Never
But
heard of him.
he's not doing a bad job because they just bought a huge portion of Health. So
Right, yeah. Hopefully he has a helmet. Sorry, was that bad? Uh, anyway, yeah. At least United Health is big enough. I actually don't know what um, their size is. That they could probably absorb a large purchase and not have it affect their stock price very much. But I could be wrong about that.
yeah,
Let's see. That was second quarter. Yeah, it really hasn't changed all that much. There's probably there's benefit to not having to disclose that stuff until the end of the quarter
yeah.
or into the next quarter that kind of stops the frenzied purchasing.
If it was like automatic, where as soon as they made the purchase,
Oh,
everyone
right.
would go crazy. But also
Mm-hmm.
necessarily be a bad thing for Warren because he could buy it, it would go crazy, and then if he can sell it once people were like, "Oh wait, this like I don't know why I have this stock. Like I didn't do the research myself." And then they start selling.
Yeah. Yeah. Uh, Although largely the stock price doesn't affect him all that much. It would help him in the short run, but he said, especially about Berkshire's own price, he's like, I look at it once a year. I'm like, oh look, there's their stock.
That's
He's
actually
like, I don't really care what the price of the stock is. I'm just buying businesses that spin off cash.
how much of his cash is Berkshire shares and how much is like uh I mean I technically I guess it's liquid, but it would really shake up the market if he sold a bunch of Berkshire shares.
Yeah, it would. it would really affect the market. I don't remember what percentage, but I mean, all of his wealth is in Berkshire. That's his, or now it's in the Warren Buffett trust or whatever.
Interesting.
Um, it's been in a trust for decades because he's talked about it at the annual shareholder meetings. But because people will always ask every year, it is funny after you've listened to several of them, you're like, come on, people. Somebody asked that question last year. Stop wasting our time. The answer hasn't changed. It's almost like when they go to the Berkshire meetings, you should get handed an FAQ. It's just previous questions. Have we already answered your question in a previous year? But some people have asked him, like, if you die, what are we gonna do? And for 30 years, he's said, like, the ownership's not going to change. If me and my wife die at the same time, which I mean, she passed away, I don't know, a decade ago, um, then it's going to the kids. It's all held in a trust. We've got a team here that's been working with us that knows how we do things, and our returns should remain similar. They may not have the same circle of competence that Charlie or I do, but they're able to do the same thing. But they also have talked about for 3 decades that it's unreasonable to expect that they should get the same returns that they've gotten previously, just by virtue of their size, and they're butting up against the BlackRock problem, which
Yeah.
is we're so big, we're running out of things to buy.
Yeah. Interesting. Interesting. Well, if you're comfortable, uh, what recent moves have you made?
Um, what recent moves have I made? I'm still holding on to my SSO position, which is a little up and down all the time. But it's been interesting with my options portfolio because um, the market has been going up slowly, and my options portfolio has just been doing the back and forth, somewhat like stabilized the the flow. It's like really slow upward trend.
Was
Um, so I think I'm keeping steady with the market between the two. I think I'm at, I don't know, 7%, and the market's at 8 for the year. Um, I'm trying to remember what was the thing we added. Not much, I guess is what I'm saying on that. Um, I looked into DHT uh, Holdings, which is an oil. Did I tell you this? I don't. If I've told you this, I'll shut up. Um, they're an oil tanker transfer brand. Smaller. I think their market cap is like 500 billion, maybe even less. And the the thing I am kicking myself about is that when I started looking at them, they were like $3 a share. The reason that they even appeared was because the way they're structured is they pay out um, most of their income directly to shareholders.
oh wow.
Uh, but they're an oil tanker business. So it fluctuates with the market. It's all cyclical. And at the time that I started looking at them, their stock price was so low. Like $3 a share is a third of what it usually trades for. I think it's at 11 right now. And so I remember thinking, like, these numbers look really good, but I know nothing about the energy transfer market. I still don't feel that I know anything about the energy transfer market, but I'm trying to learn about it. I started reading the book that my coworker said she was reading, uh, The World for Sale. And because I was listening to an interview with the CEO of this company, and he mentioned a couple books that he thought were really good in kind of understanding how the market works in that space. One of them was The World for Sale. I'm not convinced it's going to make me any better of an investor, but it's interesting. The other one he recommended, I put on my Amazon wish list, but it's like literally 1,000 pages. So I was like, well, let's go on with go with the one that's 300 pages long and not 1,000. Uh, so anyway, DHT at $3, it has been spinning off like $1 in net profit for the 6 of the last 10 years or something.
Wow.
So that was the reason that it popped up. And now I'm like, yeah, I should have just bought it with a small portion of my portfolio, because you buy it $3 and it spends off $1 3 out of every 5 years. You're still hitting, what is that, 17 or 18% on your investment.
Yeah.
Um, it doesn't have great return on capital. It's a capital intensive brand. Um, so maybe over long term, that becomes less, if it spins off the same amount ad infinitum and the stock price corrects, it's not something you really want to pour more money into. But for the first 10 years that you have it, you've made a good return on your money, and you can use that cash to put into other companies. That was one thing that I didn't think about that I'm now thinking about more, is sometimes, even if it's a company that's not going to grow but is throwing off a bunch of cash, if you can get that cash and then deploy it elsewhere, it's still really valuable in a portfolio.
Yeah.
Um, if you get it I mean, that's what purchasing at the right price is really critical in that case, because if there's no growth there and it's spitting off the same amount of cash every year or close to it, then you want to make sure you get a good price. I mean, that's pretty obvious. But you could then throw it into opportunities later that are good growth companies. So I sold Casey's General Store.
Mm.
That didn't do too well. I think I lost, I don't know, 10% on that trade, but it was only 10% of that account. So 1% total. Actually, it might have been less than that. I got in at a pretty good price. And let's see, who did we? I don't know. I'm not going to pull it up right now.
Yeah.
But no, not a whole lot of buying recently. Lots of looking and searching, but not a lot of buying. What else was I looking at the other day? Uh, oh, right. I have been trying to research about. There's structure, and I can't remember the name, but it's where if there's an international company and they want to be traded in the U.S., a bank will purchase shares and then offer it on like the New York Stock Exchange under a different ticker symbol. So you're buying a derivative of the original, but it's like a whole. It's kind of the same idea as a unit trust, but it's somehow structured different, and I'm not entirely sure how that works. But anyway, I've been paying attention to Unilever's spinoff of Magnum ice cream, um, and I didn't think about the supply chain for ice cream. A couple of things of interest to me are, well, it's ice cream. The second thing is that there's a lot of consolidation in the ice cream market, where there's like three big players. It's Unilever, Nestle. Can't remember who the third one is off the top of my head. Um, and then a bunch of small players at like 1% of the market. And what tends to happen is, as those small players get bigger, they're offered to be purchased by one of the big players, because you not only have to have the distribution, you have to have the sales point, but when you're manufacturing and growing, you have to have the entire cold supply chain. So you have to have the cold vehicles, the cold boats if you're going overseas. Uh, you've got to have the cold factories, which they probably already have some, and of course the endpoint selling places. But all of that supply chain has to be cold storage. So there's a lot of consolidation of the big three purchasing the smaller ones as they get larger, because they've already got the infrastructure. And to try and compete with those top three brands is just such a huge lift. So there's somewhat of a moat. Unilever is the biggest, and then followed by Nestle's, and they're not that big of a growth industry. There's like, I think they get 3% from domestic North American stuff, and then there's another 3%. Um, so it's like 6% return on capital. I think the other 3% is from like emerging markets, so Turkey and the Middle East and Africa, where the market share of ice cream sales are growing. This is more than you ever wanted to know about ice cream, by the way. Uh,
I don't need it.
and right, so what I'm looking for is they're spinning off, and I'm trying to figure out how does that work with international companies. And it may end up being I need to send a message to the bank that offers the shares, because they can treat it differently. They could spin it off, the bank could sell it and then distribute cash, or they could spin it off as a separate ticker, but it's not the same as how you would do with a domestic company. And what I'm really looking for is when they file documents on the 9th, which I believe is the date they're supposed to file, I want to see if the offering price is low enough that I think that a 6% return is a good return. It's 6% of return on capital, but if they offer the stocks at a reasonable price, and then the holding companies don't want them and start selling, can it get to a low enough price where, okay, well, now it's a 12% return or
Oh
an
yeah.
18% return because I bought it pennies on the dollar.
Interesting.
So
How would you
that's
message
what I've been looking at. Hmm?
how would you message the bank? Like would you just call them?
Yeah, call or email. Probably email, and then if they didn't respond, call them. I'm sure somebody knows, but I don't. For a company, there's usually some phone number that's the investor relations office, and I don't know how that works when it's a bank holding an international company. But I'm learning about it, and this might come to naught, but I'll still learn about it, and then if the opportunity ever arises, I'll know more. So
No, that's cool. I mean, whether you buy or sell or whatever, you're still learning a lot about different industries and different companies, which
yeah,
will help you in the future or could just be a cool learning experience. So
right. Hopefully, help me in the future, because
that's cool.
otherwise, it's kind of a waste of time. But
Yeah. Well, I mean, it could help you when it comes to investing or something random that you never even knew about with ice cream.
right, this is true.
Did you know that
Uh,
the average American eats 20 pounds of ice cream a year?
20 pounds. I wonder in volume what that. I guess they probably have to weigh it in pounds, because depending on the fluffiness of the ice cream, that's kind of
That's it equals
that's
about
kind of crazy.
24,000 calories.
Wow,
Just an ice cream.
that's nuts.
Yeah.
Uh, I probably eat more than that. Not now, but previously have. I probably am skewing that average high.
You were the person who skewed it up to 20 pounds.
Yeah, I mean, I can just destroy it. There's no in modern ice cream. There's like no heavy cream, so I can just destroy a tub of it. Real ice cream is at least satiating. I actually just had some sugar-free ice cream last night that I made, and it had that same thought. It was a custard, and I was like, I ate, I don't know, half a cup of it, and was like, yeah, I'm done. But okay, A Tour Lifestyles Holding, ticker ATAT, was the position that I took on Tuesday.
Oh, nice.
Other than, I mean, it's got okay fundamentals, but it's like a tourism hospitality brand. I think a lot in they do a lot of stuff internationally, like in Asia, but it has okay fundamentals and it's more of um, a short term trade. So it's got momentum with it, and there's buying pressure.
Yeah,
Buyers of sellers is or buyers, whatever. I mean, volume of buyers is pretty high. So we'll see where it goes.
nice.
Did I tell you I looked into what's one of those cheap Chinese
Like
who
Timu,
sell everything? And
Alibaba.
yeah, Alibaba. Yeah, it's the company that owns Alibaba, and because it showed up on one of the scans I was doing as a possible value buy, and I started looking into it, and it was basically like some people were like, "This is a great purchase," and the numbers did look fantastic. And you can find no information about the company. Uh,
Where are their
and
factories? Nobody knows.
yep, there's great speculation that it's all just lies,
Yep.
um, like all their finances. And good luck getting information that you feel like is real. And they have their main office is in Dublin, I think. It's in Ireland. I can't remember if it's Dublin or another city. And there's like nobody there. I guess it's not uncommon to have if you're international markets, having an office in Ireland because you get preferential tax treatment. And I don't know if trade is somehow affected. But I saw somebody that was like, let's go to the main office. And of course, it's just like an empty building. Um, yeah, it's just kind of and it's like it owns several children entities, and the ownership of those entities are just like random people that don't seem like they actually own the entities. So
Yeah.
one of them, a guy said he tracked down the supposed owner and went to the address. And it was just like a small house. And he showed up, and there was just like an old shirtless guy that was like, I don't know what you're talking about. He's like, this is your name, right? It's like, yep. So I was like, yeah, I'll let that one go past. Somebody else can take on that risk.
How how would they, because people are named the same thing, so how would they know that it's that specific person?
Well, it's supposedly at that address, right? It has a name and an address.
That's
But yeah, it's like I know nothing about this. We're just gonna leave it alone.
yeah. I think the only people that know about it is the Chinese government.
Mm, if that,
I there were the creator or the founder, I guess, of Alibaba. I'm pretty sure a couple years ago he spoke out against the Chinese government and he was gone for like a year. Just like gone.
yeah,
No one knew.
probably shouldn't do that.
Then he came back and yeah, it was just a weird thing that happened. That's what happens when you speak out against the Chinese government.
Yes, that is a terrible idea. Probably should just keep your mouth shut
Yeah.
or live elsewhere. Then you can say what you want. Just don't ever go to China. As
Well,
far as I can tell, the Chinese people aren't nuts, but the Chinese Communist Party sure is.
well, that's pretty much all the questions I have for today.
Okay.
You have anything else?
Okay. No, I'm sure I'll think of something after you get off.
Alrighty, that's the podcast. Make sure
Woo!
to reach out to us, jc.unscripted@gmail.com. Alrighty.